Have you ever sat at your desk, heart pounding, as you watch the market ruthlessly chip away at your hard-earned capital? That moment when logic collides with panic, when your carefully crafted plan crumbles under the weight of your own emotions. It's a feeling every trader knows intimately. But what if I told you the key to success isn't just about charts or strategies? It's about confronting the invisible enemy within, your own mind. In this deep dive, we'll explore the psychological traps that sabotage even the most disciplined traders. More importantly, we'll arm you with actionable tools to turn fear into focus, greed into discipline, and chaos into control. Whether you're a seasoned pro or just starting out, this isn't just a lesson, it's a lifeline. Let's begin. The emotional roller coaster of trading. Why our brains betray us. Imagine this scene. It's 2:30 p.m. and you've been staring at your screen for hours. The trade you entered this morning, the one you analyzed meticulously, is inching dangerously close to your stop loss. Your chest tightens. Your fingers hover over the keyboard, frozen. Should I close it now? What if it reverses? The numbers keep falling. Finally, you exit in a panic, only to watch the market rebound minutes later. Regret floods in, followed by self-criticism. Why didn't I stick to my plan? This isn't just a bad trade. It's a window into the primal battle between your rational brain and your survival instincts. Trading doesn't just test your knowledge of markets. It tests your ability to manage fear, uncertainty, and the stories you tell yourself in moments of crisis. The hidden pitfalls, breaking down the mental traps. 1. Fear, the silent account killer. Fear isn't just an emotion, it's a survival mechanism. When your brain perceives a threat, like a losing trade, it triggers a flood of cortisol, the stress hormone. This biological response is why you might exit early to avoid pain, even if your analysis says otherwise. Hold losing positions out of denial, hoping for a miracle reversal. Avoid trading entirely after a loss, missing future opportunities. Example, think of fear like a smoke alarm. It's designed to protect you, but if it goes off every time you toast a bagel, it becomes useless. Similarly, fear that screams, danger, during normal market fluctuations will derail your strategy. The fix, reframe fear as data. Ask, is this threat real, or is my amygdala hijacking my logic? Practice exposure therapy. Start with smaller trades to desensitize yourself to volatility. Greed, the siren song of more. Greed isn't just wanting profits. It's the delusion that you can outsmart the market. It's why traders do the following. Overtrade, chasing every hot tip on social media. Ignore risk management, doubling down on losing positions. Mistake luck for skill after a winning streak, leading to reckless bets. Greed is like running on a treadmill that keeps speeding up. You're exhausted, but you can't step off because you're convinced the next sprint will make you a champion. The fix, set mechanical rules. Example, I'll never risk more than 2% per trade. Celebrate discipline, not profits. Reward yourself for following your plan, not just the outcome. 3. Boredom, the stealthy saboteur. Markets aren't always thrilling. During slow periods, boredom can trick you into manufacturing trades just to feel productive. Skipping analysis because this one's obvious. Abandoning your strategy for the adrenaline of a gamble. Real-life twist. Boredom-driven trading is like snacking when you're not hungry. You're not responding to opportunity. You're filling an emotional void. The fix. Create a boredom playbook. When markets are quiet, review past trades, study macroeconomic trends, or practice mindfulness. Embrace strategic inaction. Remember, not trading is a decision, and often a wise one. 4. Analysis paralysis, when knowledge becomes the enemy. In the age of information overload, traders often drown in data. You might cycle through 10 indicators until your chart looks like abstract art. Read conflicting analyses until you're too confused to act. Miss golden opportunities because you're stuck in a loop of what-ifs. Example, Imagine trying to cross a busy street while analyzing every car's speed, color, and license plate. By the time you decide, the light has changed. The fix: simplify ruthlessly. Choose 2 to 3 indicators that align with your strategy. Ignore the rest. Set decision deadlines. Example: I'll analyze for 15 minutes, then act or walk away. The science of self-sabotage: dopamine, cortisol, and the trader's brain. The dopamine trap: addiction to uncertainty. Every time you place a trade, your brain gets a hit of dopamine, the same chemical released during gambling or scrolling social media. This creates a dangerous cycle. Anticipation high: the thrill of potential profit becomes addictive. Reality crash: losses feel unbearable, pushing you to chase the next high. Studies show traders experience dopamine spikes before a trade resolves, not just after winning. This explains why overtrading feels so compelling. Cortisol and the tunnel vision effect: when a trade goes south, cortisol narrows your focus to the immediate threat. This is why you might fixate on losses while ignoring broader market context. Make impulsive decisions like revenge trading. Forget your plan entirely, operating on autopilot. The survival hack: breathe before you act. Inhale for 4 seconds, hold for 4, exhale for 6. This resets your nervous system. Use mantras. Repeat: this is a cortisol spike, not a crisis. Building resilience: a step-by-step blueprint. 1. The trading journal: your mirror to the mind. A journal isn't just a log, it's a diagnostic tool. For every trade, document. Emotional state: was I anxious, bored, or overconfident? Physical sensations: did my chest tighten? Was I tapping my foot? External triggers: did I trade after reading a fear-mongering headline? Pro tip: use color coding. Highlight entries where emotions overruled logic in red. Over time, patterns emerge, like trading recklessly after caffeine crashes. 2. The art of strategic detachment. Detachment doesn't mean indifference. It means separating your self-worth from your trades. Practice ritualizing entries/exits. Light a candle or play a specific song when trading. This creates psychological distance. Visualizing losses up front. Before entering a trade, say aloud, "I'm okay with losing X dollars here." 3. The 3 gates rule for impulse control. Before any trade, ask 1. Gate 1. Does this align with my strategy? Not your mood. 2. Gate 2. Am I rational, or am I running from boredom/fear? 3. Gate 3. Can I articulate the risk-reward in one sentence? If you can't pass all 3 gates, step away. Advanced tactics: from surviving to thriving. 1. Cognitive reframing. Rewiring your mental scripts. Bad script: I'm terrible at this. I always lose. Reframed: losses are feedback. What can I learn here? Exercise: write down 5 negative beliefs about trading. Then, rewrite them as neutral observations. 2. The pre-mortem technique. Imagine your trade has already failed. Ask, what likely caused this? How could I have prevented it? This primes your brain to spot risks before they strike. 3. Building a mental board of directors. Create a council of fictional advisors in your mind. The Stoic: what would Marcus Aurelius do? The scientist: what does the data say? The coach: how can I grow from this? Shift perspectives by consulting these voices during tough decisions. The long game: sustaining success over decades. 1. The myth of perfection. Even legendary traders like Paul Tudor Jones have losing streaks. The difference? They focus on consistency over brilliance. Small, disciplined wins compound. Process over outcomes. A good trade isn't defined by profit. It's defined by sticking to the plan. 2. The evolution loop for continuous growth. 1. Trade. Execute your strategy. 2. Review. Analyze without judgment. 3. Adapt. Tweak one variable at a time. 4. Repeat. Mastery is a cycle, not a destination. 3. Embracing the trading lifestyle. Your mental state isn't shaped in isolation. Optimize. Sleep. Sleep-deprived brains are 30% more reactive to losses. Nutrition. Blood sugar crashes fuel impulsivity. Exercise. Physical activity reduces cortisol by 15 to 20%. Final word. Becoming the CEO of your mind. Trading isn't a battle against markets. It's a battle for self-mastery. Every emotional flare-up, every moment of doubt, is an invitation to grow. By treating your psychology as your greatest asset, you'll transform from a prisoner of impulse to an architect of discipline. The journey won't be easy, but it will be worth it. After all, the most profitable trade you'll ever make isn't in the markets. It's the investment you make in yourself. If you found this helpful, hit that like button and subscribe for more trading insights. Thank you for watching, and see you next time.